NVIDIA briefly soared to become the world's largest company, but its stock has since plunged 16% amid market volatility. Well, to help unpack all of the latest in the markets, we're joined by Jess Amir from Moomoo. Jess, welcome. Let's dive straight into it. So, what factors contributed to NVIDIA's rapid rise to the top of the market?
Yeah, well, it's a question that is on everyone's lips. So we saw NVIDIA quickly become the world's biggest company last week. It was pretty brief, and then subsequently its shares are down 16%, as you said at the open. But I think still we have to remember a lot of NVIDIA's shareholders who didn't partake in that rally, where their shares are up about 150 or 140% now this year. A lot of NVIDIA wannabe shareholders might be joining the party soon. There is a little bit more tank in the or a little bit more gas in the tank for their shares to fall back further and potentially even pull back in total about 24% from that high. So that means NVIDIA shares are now in a correction. They're down 10%, but I guess as analysts, we're just a little bit cautious and we're thinking NVIDIA shares could maybe even fall 20% from that high that they hit last week. So they could potentially fall around $100. But still, we've got to remember, as you rightly pointed out, this stock is rated very favorably. It's the only big mega cap stock in the world that has got forward earnings growth of 98%. So there's no other company in the world that is expected to see their revenue rise 98% next year. They're also looked upon pretty favorably. 89% of analysts have got their stock as a buy, and of course we know that's backed by the fundamentals. They've rolled out that new more expensive GPU chip this quarter, and then they're rolling out another more expensive chip next quarter as well as Q1 next year. So the goodness continues to come through. It's just that they're experiencing a little bit of profit taking, which is very normal around this time of year with end of half year. And of course in Australia it's end of financial year. So expecting more profit taking before we see NVIDIA shares probably return to shooting for the moon, I guess, if you will.
Jess, it's really interesting to see that 16% drop though. Let's talk about why did that 16% drop happen from its record high?
Well, I guess a lot of people are asking that question too. So when a stock has run up so hard and fast, as it has, it's up about 150% or 140% this year, naturally we're going to see some profit taking. And this is quite normal around 30 June. So this week is a time when we see end of half-year rebalancing take effect. So it's a time when investment managers might be trimming some of their stocks that have gone up a lot, but they're looking to bring their portfolios back into alignment. So now the tech portion of the pie is looking a bit, you know, it's spilling over. So the average investment manager, because the tech or AI and chip sector, specifically in tech, has run up so hard and fast, their portion of the asset allocation is a little bit more than the average investment manager would like. So naturally, when you've got investment managers around the world all selling or taking profits from a stock that have done well, naturally it's going to cause their shares to pull back. It doesn't change anything at the company level. It just means it might be an opportunity for some investors to take advantage of this pullback. But then you might be asking, okay, right, so you've got investment managers around the world who are all taking profits from, I guess, the most talked about stock in the world, NVIDIA. Everyone's taking profits, so where are they deploying them? So they're taking profits for NVIDIA, and they're probably going to look to be deploying cash and capital elsewhere. So we know, Benet, when we think about July, July is one of the best months for the share market. So in fact, the S&P 500 has gone up 1.3%, and it's generally a time when we see investment managers put capital back to work that they've taken off the table. So they've taken their profits and they're sitting on a good sum of profits, and then they're getting ready to, I guess, realign and reassess where is the most earnings growth going to come from for the year ahead. And it's probably going to be tech, but we're just waiting to see what happens as the dust continues to settle, and more money will expected to rotate out of tech and then potentially be redeployed from July.
Yeah, absolutely, Jess, and we'll see what will happen towards the end of financial year that's coming up soon. Thank you so much for your time today, Jess and Mia.
Thanks so much, Benay. Have a good one.